Morning all. Please let me know if it's working. I don't have, unfortunately, the luxury to check it myself today. Actually, maybe I do. Maybe I do. Let me start the case here. And everything's working. And thank you so much. Okay. So while we are focusing on launching new things as always, and of course the feedback is that we're moving way too fast on some launches. I think that's a good problem to have. I think that's a very good situation to be in where stuff is launched fast, right? So specifically, the interesting scenario that happened this week with the DAO is lots of people cannot get to become a validator because the price is too high because somebody pushed the price way too high. Maybe let me demonstrate this one second. Let me. That's a good problem to have because it means that somebody poured lots of liquidity into the DEX, and then today it's just challenging to get and become a validator. So what are these resolutions for that? Let me open the screen. So what would be the resolutions for that? The resolutions are quite simple. There's bonds, right? So you can, well, you can just mint more Ethereum, and as you mint more Ethereum, you switch that via the faucet to GDAI, right? As we all have been discussing many times. Then after that, just buy it, even at these crazy prices. Like prices are crazy at 13,000 per Casper, eCasper, but it's not like whatever, not excessive. So there are solutions. To those who seeking solutions, there are solutions. Now the discount currently is 96.5%. So like it's completely not excusable today to not have enough eCasper to become a validator. Keep claiming. So if you go for Ghost Faucet, you get 0.01 every day, but I mean, lots of people game it by switching different VPNs and wallet addresses. So if you do that, you can claim as many as you want, as many VPNs as you have, as many geographies as you have. That's how many, as many IP addresses as you have, different IP addresses. Um, the more 0.01 of ETH you can get. So let's assume you have 5 VPNs. Each VPN will probably give you about 4 IPs. Let's assume you're looking at 20 IPs. So that's 0.01 ETH times 20. That's 0.2 Ethereum every single day. So over the course of a week, you can get 1 ETH. 1 ETH is, based on this faucet, is 3,500 GDAI. 3,500 GDAI, even at these rates, even at these crazy rates, will essentially 3 Ethereum will get you 1 Casper. But if you're gonna go and buy it currently on the bond is 460. So if you're 1 ETH, you can get your 7 Casper within a freaking week with the bond. Like no excuses. And of course, the community members, some helpful, some not helpful. But that's a community. That's a good thing. I'm happy that the discussions are happening, how they're happening. Um, one whale in particular has been nonstop requesting without success. And he didn't get any Casper. Okay, that's cool. Like it is what it is. Like that's the community. The community has spoken. Um, okay. Good morning, Scorpion, as well. So what I have been working on though, outside of this DAO, right? So the DAO is important. The multi-chain UIs will start. We need to start getting into that. But my head, my heart, is with the tokenomics end of things from perspective of framing it. So the tokenomics has been there, but the question is how to frame it correctly. So on the framing component, I did share with the whales a concept of Vita money. So we're going to discuss it probably next week as more articles going to come out next week. I'm finishing the article right now By the way, the articles are getting longer and longer, and with a lot of statistics, with a lot of backend, with a lot of sources, linked to sources too. So whatever is mentioned has a proper proof. But the more and more I'm realizing that we are actually creating something truly novel. And yes, we mentioned that before. One of the whales put it properly or correctly or excitingly that, okay, so what we're building is we're building a currency where gold can represent, like replicate more gold with this elasticity situation. And there are some comparisons and there are some articles about these comparisons as well with a lot of statistics required. And I thought initially it would be 5 pieces, but it's already 7, and it's probably going to be 15. And that's going to be the most important section that you guys should read. So every single, I need to ask you, I would like to ask every single person to please read these ones. Ghost Monetary Paradigm, we finally uploaded this as far as last week as into a separate section. There are 4 articles currently. I'm going to be giving you a sneak peek on Article 5, 6, and potentially 7 today. The 8 is in the works. The 8 is quite revolutionary, and then the consequence of the 8. So treat this as a book. It's a mini book. So far, it's 160 pages, not single spaced, with charts. So the actual copy is less, but it's turning into a freaking book. And I do not know of a single project that understood exactly what they're building and also were able to frame it properly. I do not know a single one. Maybe if you do, sure. Like even Bitcoin was framed by the by believers in Bitcoin, right? But not by Satoshi himself. Okay. Do you have any questions? I'm not seeing. Okay, we don't. Okay, good. All right. So this is the most important part. If you bring in new people, they should be reading this. They should be reading this. If they find this, as one whale pointed out, if they find this boring, they're not the right fit. Like they're not the right fit. So I'll just give you like sneak peeks about this, about like what we're building, and then next week we're gonna cover this in detail. And today we're gonna be focusing on elasticity of eGHST and Ghost. So we have fiat money, and we say fiat money is bad. Fiat money is bad because, as we discussed on the last call, it's elastic. It's expanding in supply without proper expansion in price, right? So the variability of price is less than variability of supply. And of course, with fiat, typically with assets, it can go either up or down. With fiat, it only goes up, right? So it's only rebasing up. So the quantity really does not shrink. So for a normal asset, you would be like the asset would be expanding abruptly and also shrinking abruptly. Like it would be expanding and shrinking both massively. In case of fiat, it's only expanding. Okay, it's only going into the positive side, in the negative connotation of that word. Because the more the supply, the higher the supply, the greater the supply, the lower the purchasing power. We discussed that last week. Rewatched the last week's episode, whatever. Um, Now, to counteract against the fiat, then there's reserve currency, which is typically represented by gold and silver. And Bitcoin is also considered to be the digital reserve currency, right? So that's kind of the situation. Now, of course, you say, well, but Bitcoin is, so reserve currency meaning fighting against inflation. So gold is an inflation hedge. So let's assume that inflation is 5%. Gold is expected to grow by 5%. Some critics say that it doesn't, but it fucking does. Like they need to study the prices of spot gold. They need to study the price of futures on gold contracts. It's called typically GC. Then depending on the month and the date of the expiration, they have no idea what they're talking about. Yes, gold is inflation is a long-term inflation hedge. So it's not protecting yourself every single year, but it's protecting you over the long term. In fact, if you look at the S&P 500 insane growth, powered by inflation and not powered by anything else, gold adjusted S&P 500 is flat over the last 5 years. Gold almost doubled in 5 years since COVID, in case you guys don't know. So it's a great inflation hedge. And then Bitcoin is like growing way faster than gold, right? So like, okay, so Bitcoin is not an inflation hedge, like it's not a reserve currency. But the thing is, like, it's a growing asset, like meaning it needs to get to the maturity phase first, meaning it needs to envelop, embrace enough users, enough people in the world to hold it, and then the growth will stagnate. So it's not that the growth will not exist because inflation will keep happening, fiat currencies will keep happening. So at some point of time, once Bitcoin reaches a significant market cap, today I'm not sure how much, maybe $2 trillion. Once it reaches a significant market cap like gold, say around 10 trillion, right? If it gets there, and probably it will, not a financial advice. So it has another 5x continuation growth. And our spiritual leader, John McAfee, famously said, if Bitcoin does not get to $1 million, he can cut his dick off, right? So, and eat it, right? Something like that. So, and then he said it's a joke. Like, if you do the math, it's not possible. He just did not, when he said it, I think he said it before COVID, right? So he did not realize is how crazy the monetary system of today will become, where the central banks will just start printing money uncontrollably, like completely uncontrollably. Over the COVID, the monetary supply went up by 30%. Then it kind of stabilized, but it went up in the course of a year by 30 fucking percent. Meaning inflation, short-term inflation should have been 30%, and it was, right? Some people say it was. Even officially, it was up to 8%. So at some point of time, Bitcoin will stabilize. Let's assume 10 trillion, so that's another 5x, right? So today, 120,000 per Bitcoin, another 5, that's $600,000 per Bitcoin. So it's really close to a million. So it can easily get to a million at some point of time. We're not talking about next week, we're talking about the next years. Of course, there's some impression that it's overvalued today. So like today's price of 120 is potentially too high. The realistic price probably should be around 30 to 40 grand. So can it drop to that price? Yes, it can. Does it mean that the prediction will be wrong? Absolutely not. It's just I think it went up too high, too fast. Right. So it's up there. Bitcoin is up there very prematurely. The realistic growth rate, I believe, in AAA cryptos like Bitcoin, Ethereum should be probably 15 to 20% per year. And Bitcoin went up a lot more in a shorter time frame. So it will, at some point of time, revert to the mean. It will probably collapse. Everybody will be like, what the fuck? Like, like the prediction is not correct, but it is more than correct. It's just that it's going to be a nice opportunity to start accumulating because if Bitcoin becomes a digital reserve currency, and it probably will become, the elasticity analysis shows that it probably will become, the path to $1 million per Bitcoin is almost inevitable. Of course, it's a matter of time. It may happen by the time of 2050. Now, does it mean that the purchasing power will increase by that much, right? Because we think, oh, like if you can, it would be nice to have $1 million per Bitcoin today. But of course, in 10, 20, 30 years, the prices will correct themselves as well, right? So like if the real estate, say in Hong Kong, is $1 million, $2 million per apartment, in 30 years, it's going to be $5 million per apartment. So the purchasing power will not necessarily, per one Bitcoin will increase proportionally to the price. It won't, obviously, because fiat is keep inflating. But it will probably be exceeding the inflation at some point of time to get that initial mass of say 10 trillion in today's money, to match gold, or maybe even higher. And then after that, it will start stagnating as far as increasing in prices. At that point in time, it will start just pacing with inflation. So that is the thinking process. Okay, cool. That's reserve currency. What about what we're building? So like the Austrian economists say gold is better than fiat, but is there a better money? It seems like there is. And that's what we're going to be discussing in more detail next week. And we like to call this category Vita money. Vita stands for life. So more and more sources I find, and this is going to be all mentioned, from history, from ancient history, from philosophers like Aristotle himself, where he mentioned in politics that the coin money, because back then there was no fiat, he was actually criticizing coin money. So he was actually criticizing gold money. Seems like in favor of Vita money. And Ghost is the first Vita money. And Vita money is the money that has two properties. A, it's inelastic. B, it is able to self-replicate itself. So that is the new category. We're going to introduce it in the article 8th, which will be published in the next 2 weeks, but we're going to be talking about it next week. And that's the article that I'm finishing. So nothing more than exciting for me. I mean, my mind, my heart is around the Vita money. Vita money is the money of the future and more natural. Like there's lots of sources, lots of evidence, lots of fairy tales, lots of mathematical inventions, lots of philosophical discussions, all around Vita money. And there's not a single project today that does it. There are certain, obviously, industries are way bigger than gold, by the way, that are focusing on Vita assets. Those Vita assets did not become Vita money. We also get to discuss why that was the case. But Ghost is the first Vita money type solution. And the more I'm thinking about this, the more I'm realizing that this is truly a new monetary paradigm, hence the article section, Ghost Monetary Paradigm. It actually is a new freaking paradigm. And I'm jokingly saying that we may perhaps at some point of time win the Nobel Prize, I'm not sure, for renovating, because Bitcoin Satoshi should get a Nobel Prize, probably of peace and economics at the same time, because he'll probably stop a lot of wars. A lot of people will be able to protect themselves against inflation. So he saved lots of lives. But he simply digitized properties of gold. Let's put it this way. What Ghost is going to do, Ghost is going to bring the Vita asset into Vita money on-chain, meaning digitally. And that is absolutely huge. Right? So we're going to bring the ancient wisdoms from 3,000, 4,000 years ago back into today's time, current time, with on-chain possibility. And Vita was not possible without on-chain. Like that's the whole thing. Like Vita had to be digital, and it's just not. And there are problems with Vita money, hence it did not become mainstream. But Vita was allegedly the first money. Gold was not the first money. Vita was the first money. All right, so very exciting stuff. You need to read. Every single person who joins, whales, potential councils, they need to read this thing, the entire paradigm articles. Lots of statistics. It's like a mini book. The Vita article on Article 8 is 8 pages currently. It's probably going to be more. All right, so it's getting longer and longer because we need to go over details to make sure that we're not wrong anywhere. Okay. So last week, we paused on elasticity of monies. We discussed dollars and USD, fiat, euro, treasuries. We also discussed Bitcoin and Ethereum. So now, what can we say about elasticity of Ghost ecosystem tokens? We're talking about eGhost and Ghost. Both tokens are utility, not security. That's very important for me to mention that. So what can be said about elasticity? So let's dive into these articles. Let me just open this up 1 second. All right. So Article 5, Part 5. It will become public soon. Elasticity of eGhost. So here we discuss, this is the first intro. eGhost will have its own article later on behalf of the Ghost DAO section, or whatever, master section. It will discuss eGhost in way more detail, but this is a quick and dirty look here. So eGhost comprised of the following, right? So you can mint eGhost through initial eGhost donation, which literally donated to the treasury. Then staken, right? So the APY today it's 69%. That APY creates eGhost. Bonding creates APYs, and pGhost bonds create eGhost, and pGhost creates eGhost. So these are the only 4 sources of eGhost. There are no others. So let's discuss each one. So each one needs to be discussed from perspective of elasticity specifically. So let's just define elasticity one more time. Essentially, it means that price spikes in greater magnitude than the quantity available. So in layman's terms, you can say that scarcity, so the more scarce the asset is, chances are the more elastic it is. Not necessarily, but chances are the more elastic it is. Like if it's like super layman's terms, okay? Any questions? No questions. Okay. So here, initially ghost taken, total bonds, and total p-ghost, we need to see, are they elastic themselves or not? So are they scarce or not? Are they finite or not? So initial e-ghost is just a donation. So how this works is, so that's a diagram here, donations, taken, bonds, p-ghost, okay? Initial donation, how this works is this. So whenever the eGhost is minted for the first time, the smart contract of eGhost is minted, there's no eGhost. So eGhost needs to be minted as well. So how to mint eGhost? Well, it always needs to maintain the hard cap, the hard price floor of $1. That's a requirement. That's a very important requirement. Without that requirement, eGhost is elastic, by the way, right? With that requirement, eGhost is actually inelastic. Even eGhost is inelastic, which is quite insane, which I actually do not even think. I thought that eGhost is consistently unlimited supply, and that's not true. In the short term it is, in the long term it's not. And the reason why it's not is due to this little feature of a hard price floor of $1. Okay. So that hard price floor of $1 means that every single eGhost must be minted with at least $1 back in. It's required. It's on-chain required. So if you want to say mint the initial allocation of 10,000 eGhost, therefore 10,000 DAI needs to accompany those 10,000 eGhost. So we have 10,000 eGhost and then respectively 10,000 DAI. So that 10,000 DAI is the donation. So we send 10,000 DAI to the smart contract to mint 10,000 eGhost. Now the one price floor is therefore maintained on chain. But there's no pair yet. So what we do, we put that 10,000, so therefore that 10,000 DAI has just been donated to the treasury. Now we got 10,000 eGhost in return. So that 10,000 eGhost now goes to the DEX. On the DEX, what we do, we put the 10,000 eGhost and put another 10,000 DAI to make sure that the initial price on the DEX is also $1. So now there's 10,000 eGhost on the DEX and also 10,000 DAI on the DEX. And there's a $1 price per each eGhost respectively. And then, since that's the origination of the pair, that pair gives you LP tokens. So those LP tokens also need to be donated to the treasury. So what's donated to the treasury, therefore, is the initial 10,000 DAI to mint the initial 10,000 eGhost, and then the entire LP position, comprised of 10,000 eGhost and 10,000 DAI. So total contribution, total donation to the treasury is $20,000 in that specific example. The larger the donation, the less aggressive the price spikes are going to be, and vice versa. So if instead of 20,000 donations, say total 200 donation, 100 eGhost, therefore, and 100 DAI, then of course the price action on the DEX is going to be even more extreme, right? So we just need to understand that. Now, donation is obviously limited in nature. It's finite. It's a one-time thing. Of course, donation can keep going, but the donation is just a one-time thing, kind of. That's the expectation. So therefore, donation is purely perfectly inelastic. It's finite. So that section we understood. Okay, cool. Now staking. Staking is a more difficult section. So for the staking, what happens is, say today, the total supply of eGhost is 10,000. But we also have an APY of 69%. Where's the APY? Let me open. Almost 69%, 68.87%. So what happens is this APY is real. It actually is absolutely correct. It's absolutely real. But there's a caveat, the nuance. The nuance is the APY is real until the price, the backend rather, reaches a $1 price floor. So currently price floor is 29. It's probably high. It's probably 35 or something. Like the audit reserves need to be, that function needs to be called. So let's assume just $30. Okay, so the $30 current backend, whenever it reaches $1, that's where the APY will programmatically stop. So at that point of time, 69% will just stop. So no eGhost will be minted. So programmatically, therefore, due to this price cap of $1, RFE cap rather of $1, the like the staking mints Casper, eCasper, literally every single era, which happens every single 8 hours. So every single 8 hour was this, right? So like this rebase in 7 hours, right? So it's not just a joking number. Like every single 8 hours there is an error. This error mints 69% of annualized supply. So what you do is mathematically calculate 68% per year, converge that into the APY, the respective APY every single era of 8 hours, and you're going to get that specifically era APY. So over the course, like since we launched it, so far, you see how the index is 1.02. So 2% of total eGHST supply has been minted since the launch so far, with 69% of APY. Now, APY can be changed by the DAO, so it could be increased to whatever, 10,000% APY, 20,000% APY. That's what Olympus had. Could be dropped down to 2% APY, whatever, right? 69 is a nice APY, we believe, so far. Why? It's way above the market rates, and it's massively freaking consistent. How many years it will take for that APY to be maintained, given the fact that the backing is $30? I mean, quite a lot. The $30 RFE can drop if the token drops, right? So like, because the backend is comprised of DAI and LP positions, so DAI position will never drop while this DAI gets depegged, so that's unlikely. So let's assume it doesn't happen. But LP token valuation may drop, right? But again, that's an RFV, that's not an MV. That's not a market value position, that's a risk-free value position. So it's very much discounted. And if the Casper price drops, so will be the LP position will also drop. So the RFE may potentially drop in valuation. But currently, it's comprised heavily of DAI. So therefore, it's probably going to be around $30. So if you assume that eCasper price say drops to $500 or whatever, and the backend RFE stays at $30, for that to drop to $1, the number of years you guys need to calculate it. I mean, I will probably calculate this in Wales at some point of time, but it will take fucking years for that 69% to really like take place, like to really like kind of, suffocate the protocol. And that's a beautiful part about this position, this whole kind of situation. Now, of course, if the APY is instead 10,000%, like the higher the APY, the lower the time frame over which the APY can be maintained. But nevertheless, given this description, staking does mint new eGHST. So since eGHST gets minted, the eGHST at that point of time is elastic in the short term. So therefore, it's elastic up until one of the two things happens. The first thing is the price floor reaches $1. So if the price floor is $1, that's it. APY stops, minting stops, and eGHST from staking perspective becomes inelastic. It will not be minted anymore. That's the first scenario. Second scenario, the DAO, very similar to what Olympus did, they said, we're not going to wait until it drops to $1. We are going to like put an artificial price floor onto RFV. Let's assume $20 or $10 or $100. So, well, in this case, in our given reality of RFV $30, let's assume the DAO says, you know what, like if it drops down to $10, we stop APY. That's it. So it's not a programmatically enforced APY from perspective of like the protocol. It's more like a DAO vote. So once the RFE gets to $10, the DAO votes and says, okay, now let's just change the APY from 69% down to 0%. That's it. Boom, we stopped it. So both scenarios, though, will lead to the supply of eGHST to become inelastic. So going back to this article here, like I know that like it's maybe a lot of things. Like please ask questions. I'll check if there are any questions here. But so while donation is very straightforward, just a finite supply of donation, like it's inelastic. This one's taken. It starts as elastic in the short term, and over the long term, it becomes inelastic. And that's a freaking innovation of Olympus, by the way, not of Ghost, of Olympus. Olympus just, I mean, I'm pretty sure Zeus, the founder, like he most likely kind of understood hypothetically what this is, but nobody was able to ever put such framework around it. And I think that's like one of the novelties of Ghost. We're at least able to explain from economic perspective what happens with Olympus. Okay, so let me check the questions. Questions or not. Questions from Mr. IDK. Where does the second 10,000 come from? The same donor? Well, yeah. So exactly, yeah. So correct. So question, yeah. So how does donation, like where do we get donations from? Well, I mean, the team will probably donate it, or the council will donate it, or the community will donate it. Right? It's probably something like this. And yeah, like, but it's a donation. And that donation is the reason, by the way, how Vita money is able to exist. The more I'm thinking about this, the more I'm realizing that it is that donation. Specifically, donation means you cannot take it back. Like you can't. Like you really can't. So it actually is a donation, and that donation is freaking crucial. It's like an example from the. Because Mr. I know you like analogies. Like perhaps the best example here will be imagine so far 21 million cap of bitcoins, right, in the world, and Satoshi has about 1 million. So Satoshi is one of the richest people on the planet. So imagine Satoshi, who has 1 million bitcoins, either burnt it or donated it to some type of treasury. As a so he was not the first. Like he did not pre-mint it, by the way. Like it was not like a Genesis block. Like he actually minted it. Like he was just staking Bitcoin and he was just whatever. He was one of the validators and he was just he earned it just like everybody else, right? Like he earned it like fair and square. He was just like he was one of the first validators, hence he earned a lot. Like for quite some time he was probably the only validator. Maybe, right? Like, or maybe he set up like multiple nodes himself, right? So, but imagine that there was some type of treasury where he would donate it, and that treasury is responsible for some type of price action. That's literally what this is, right? Like that's literally what we do with egos. And again, who created this? Olympus DAO created it. So we cannot take the genius for it onto Ghost. It's just that we again able to properly put the framework around, like economic framework around what's happening. Great question, Scorpion. If the RFED dropped to the floor of $10 and APY went to zero, would the APY return, say, creep back up to 69%? Well, no, it wouldn't, and that's we gotta get to this. Like, that's a great question. So he, like, Scorpion is asking, like, okay, cool. So like, this is 0% now, and the price flow is $10. Can anything happen? At that point of time, of course, like programmatically, the DAO can say, hey, you know what? Like maybe instead of $10, let's just let's drop it to $8. In that case, of course, the DAO can say, hey, let's bring it back to 69%. And then then the RFP will be dropping slowly from $10 to $8. But if the DAO just decided and said, that's it, like we're just not going to reinstate it, programmatically, nothing can be done, right? So like the dollar floor is like absolute programmatic floor, like literally nothing can be done. With it, say artificial price floor of $10, the it will be up to the vote, but like while it sounds very easy to like, oh, let's just like the vote can always be changed. If the distribution is very uniform, it's going to be almost impossible to make changes. Like votes, by the way, will be very challenging. I'll tell you right there. Like it's not that DAOs are failing. It's just that there's no real voting, that exists in the world today. Like people, when we elect presidents and prime ministers, like it's not fair voting. Like at least decided what to do. We vote because we're fucking sheep. But if people actually decided, like actually examined the programs that politicians are presenting, not the populist slogans, but actual like plans, we would have a different story, and we would probably not be able to agree on many things, right? And we would probably have to split, and that's exactly what libertarians are suggesting. They're suggesting, screw this big government. Let's just, work in small communes, because those communes will be all self-cognizant about what's happening, and that's good, and they'll understand exactly what's kind of what they're voting for. But there's one instrument that could spike that RFE, and we're going to discuss this in a second. So again, we discussed so far donation, right? So donation is finite. Staking we just discussed. So staking, if it's artificial $1 floor, not much can be done. With the artificial floor, something can still be done. With the dollar floor, nothing can be done. Like that's it. And then we're gonna get to the third one in a second. Okay, Mr. IDK, what would be the benefit for the protocol for freezing the APY? If the APY is frozen, the supply, that's a great question. You guys asking great questions. And those questions we need to discuss in Rails, by the way. Like, if you could, like, read these articles whenever they're published and ask questions. Like, this is our Bible. I'm serious. Like, this is, jokingly, we should get a Nobel Prize for this fucking. I'm serious. Like, they won't give it to us, but we should be receiving it as a protocol, as all of us, like council members, everybody involved. Because this is cool shit. What we build, like actually changing the monetary system, the monetary theory even. If the APY is frozen, no new eGHST is minted. eGHST is completely inelastic. The price just increases while the supply stays the same. We achieve Vita money if it's completely frozen. Now, if it's not completely frozen, it depends on whether eGHST is elastic or inelastic in that short time frame. Because over the long term, the APY will either be frozen or it's going to be tiny. So over the long term, from staking, eGHST will definitely be inelastic. One of the reasons why is also because of the curve. As you notice, right, like the curve is also helping eGHST to become inelastic in the long term. Genius, right? If eGHST is minted on a centralized listed on a centralized exchange, no bueno, not happening. But we're not listed on the centralized exchange. We anti-centralized exchange. That's a huge freaking kudos. Why? Because the Casper price on the DEX is working based on the curve. And the curve is actually pushing the price higher than the quantity supplied. So it's working like a curve, right? Not a bonding curve, just a curve, the hyperbola. Because of that, mathematically, that feature of the DEX enforcing eCasper's inelasticity. Okay? So, as whales, question, would you want the APY to be frozen? And the answer is absolutely yes. At least my opinion. Now, of course, you may have your opinions. Please back them out. Because, back them up. Like, maybe I'm wrong. Maybe my assumption's wrong. But the more I thought about this, the more I'm like, the ideal scenario for the whole ecosystem is inelastic supply of eGHST on every single EVM. Perhaps perfectly inelastic means like zero APY. In that case, if you start thinking about how bridging will work in that specific scenario, where bridgers will just be pushing the price up every single bridge, there's no APY. Who cares about the APY? The APY will come for the validators through bridging fees, and every single bridging fee will just be pushing the price higher because the bridging fee, in order to bridge, you have to on the back end go through the DEX. Today, all these steps are one by one, so we do them manually. Down the road, person comes in, he wants to bridge, presses the button, all these 4 steps down in the background. She doesn't even know what the fuck's happening. Okay? So that's how it's going to be. Okay? Great questions. Very, very good questions. Thank you. Very good questions. And again, Mr. DK, if anything needs to be turned into, this content, like this content needs to be turned into stuff. Like, needs to be studied. If anything, let's have, calls on this, but like, this is very important. Going to Scorpion's question. Okay, can we bring up? Okay, Scorpion's asking another question. Seems like early in an APY would bring on users' interest, but long term. One second, I don't see it. Let me just read the question. Scorpion's asking. Seems like early in an APY would bring on users' interest, but long term minimum APY. Yes. Now, in case of Olympus does not have an APY period. So they reached perfectly inelastic supply of Ohm. They've done it already. Literally zero APY. They got rid of APY in 2023, early 2023. So, and Mr. DK, thank you. Yeah. So you're correct. We need APY exactly as a marketing gimmick to bring on users. That APY doesn't mean much. It means something, but really doesn't. I would say the biggest APY that really means something is the validated APY from the bridging. That is the most important part. That is Not a financial advice. That is the fucking meat. And one of the articles actually focusing, since we're talking about vita money, vita means life in Latin, right? So we actually talking about, I'm actually be describing the meat production, so no pun intended, but in article number 8, like lots of research and statistics about it. It's really relevant for us. But yeah, there's going to be so much meat from validator stuff. It's crazy, guys. Not a financial advice. Now, Scorpion, going to your question. How can we potentially, so all this stuff is discussed here, right? Everything. So yeah, they paused in 2023. Yeah, I was correct. I even have we even included a link to where they paused it. Around $10. Around, we're not sure, but around $10. Bonds. So bonds is the source of eGHST that will make it elastic. And that is what we need to kind of fight with a little bit. So bonds is this interesting animal. And that is the reason why I really contemplated whether eGHST is elastic or inelastic, fundamentally, right? So there are two types of bonds. We have DI bonds and LP bonds. So the current bond today is DI bond. Okay, fine. There are also LP bonds. You guys remember from old Cipollio, we're going to do LP bonds as well here on the new Cipollio as well. So each one has a different consideration. So we need to consider the scenario first things first. Let's assume the RFE gets down to $1 and then the bond discount is 0, right? Because here's the thing. When the RFE is just $1, programmatically, you would not be able to put a discount below the RFE. So the bond stops when it reaches $1. It automatically programmatically stops. Like nothing can be done. Then the question is, what will happen to the price? So if the RFE is $1, will the price be greater than $1? Today we say, yeah, it is. But today we're playing with fake money, right? Like, yeah, today's like the back end is $30. The price is like insane. Olympus, I don't think Olympus, well, it was never like this, like that. Like, of course, the market price is above the RFE, but what is that premium, right? So I call that premium market cap to RFE premium. We're going to be discussing this on a new series of articles at some point in time, which I actually wanted to write by now, but the Vita Money kind of preceded. Probably in September I'll start writing the Ghost Down articles about those ratios in particular. But this ratio here is crazy, right? It's like $13,000 to $30. It's like 400x. It's fucking crazy. You would not be buying this shit in the real. Like, with real money, you would not be buying eCasper right now. No fucking way. Like, absolutely not. Because the fundamental value is just $30. Now, you would buy a stock like Amazon with this ratio, right? As we discussed, the P ratio of 400. And Tesla right now trades at the same, right? Or NVIDIA trades at the same, right? So crazy people buying that shit. But like, I don't think you would be buying at these crazy ratios. So going back to if RFE is $1, what is the price? Will the price be $2? In that case, the bonds can be introduced. But what if the price is also $1? Or what if the price is $1.10? If it gets that, because it's a realistic scenario. Now, when I say the RFE is $1, I mean that we could have 1 trillion, literally, I'm not kidding by the way, 1 trillion DI on the DEX versus 1 trillion eGHST on the DEX. So just the fact that it's $1 does not mean that we're losing. No, we are absolutely static. Means the bridges are fucking great, and the bridges make like literally print money. Not a financial advice, right? So $1 does not mean failure by no means. $1 could mean massive fucking liquidity. Like way more liquid than Tether or Circle, but programmatically and decentralized. So in that specific case, right? Like if the discount is 0%. Then the bonds will not be introduced. Chances are, again, under the assumption that there is not enough premium between RFE and the actual price on the DEX, right? So what's going to happen though is, in the short term, the bonds will be minted, but over the long term, every single bond quantity will be irrelevant compared to the total quantity. What I mean by this is this: so the total supply right now is 10,000. Imagine the total supply is 10 million, and you introduce a bond for a capacity of 10,000. So that 10,000 compared to 10 million is a dip in the ocean. It doesn't really mean anything. Over the long term, as supply of eGHST is increasing, no matter what the bond supply is, that bond quantity will be diminishing. Right? So the limit, and I think I present a mathematical thing here as well. Do I do limit somewhere? Maybe maybe in the next article. No, it should be here somewhere. Oh, I don't. Oh, that's interesting. Well, let me check. I presented it somewhere. It has to be somewhere here. Essentially, there's yeah, maybe the formula just didn't get included. So essentially, the limit, when you take that limit to infinity, yeah, I can't find it. Yeah, I need to check it. When you check, when the quantity of or the supply of egos goes, very high, then you will get to the 0/0 type of scenario, where the price impact is 0 because there's no discount, because the discount is 0%, while the supply impact is also 0. It's approaching 0 with the limit, which is approaching infinity. In that case, we get to the indeterminate form, mathematically indeterminate form, which could either mean elastic or inelastic. But with dye, it will become more elastic. And when we do similar thing with LP tokens, with LP bonds, it will become more inelastic. So overall, this composure of the dye bonds and LP bonds will get us to neutral position. So it's not elastic or inelastic, it's purely neutral over the long term. In the short term, of course, it's elastic. Long term or short term, we are printing eGHST, we're increasing the supply of eGHST, not necessarily proportional to the price. Maybe the supply increases faster than the price. And yes, bonds actually put somewhat elastic pressure on eGHST. Over the long term, it's literally neutral, because with dye bonds is slightly more elastic and LP bonds is slightly more inelastic. So totally neutral. And that is the way. So essentially, what will bonds do? The bonds will increase the backing directly, right? Since they increase the backing, you can then introduce you can then introduce APY for like another year, for example, right? Like depending on, obviously on, sorry, here, 69%. You can increase that APY depending on 69% longer, shorter, whatever, right? So does this make sense? Like, because I'm kind of everywhere here. Just trying to make my point. Let me see the questions. No questions yet. Guys, I mean, I'm kind of like jumping back and forth on these bond issues. It's not a very easy topic to explain. Better to read this through, right? But overall, I hope you got it, right? So I hope that you understood that bonds will be raising up the RFV. Bonding then therefore could extend the APY. Therefore, bonding could extend eGHST to be elastic. But that also depends on the composure of bonds. If it's dye bonds or LP bonds, then your elasticity will be either more elastic or more inelastic. Okay, final point. Final point associated with the whole eGHST elasticity. So we have pGHST. That is the final fourth component that mints eGHST. So the formula will be like this, where 1 pGHST plus alpha times dye is equal to 1 eGHST. So we need to make sure that every single eGHST is backed by at least something. And alpha here will be somewhere in between 0 and price of eGHST itself on the DEX, right? So essentially, depending on how many pGHST you would like to convert, and remember that GNVs are the same as pGHST, right? So you get, for every single GNV, you got 1 pGHST. So your pGHST need to be accommodated with dye in order to get that to 1 eGHST. That alpha will probably be depending on the percentage of the total supply that you would like to convert. So if you want to convert 0.1% of the total circulating supply of eGHST, alpha is going to be tiny. If you want to convert 20% of the total supply, then alpha is going to be increasing. We're going to be covering pGHST, eGHST again in separate articles. So these articles here are just for the overall paradigm. Then we're going to be discussing what's pGHST, what's the function, what's eGHST, how this works, what's sGHST. So we're going to be discussing lots of this stuff, lots of these things in detail. Here, this is just from elasticity perspective. So based on this formula, since the quantity of GNVs is finite, it will be finite by the time of genesis, by the time of mainnet launch, so will be the quantity of pGHSTs. So therefore, we can only mint a finite quantity of eGHST from there, so therefore pGHST is purely inelastic, perfectly inelastic. So if you're going to go back to this matrix here, donation is perfectly inelastic, pGHST is perfectly inelastic, staking is short-term elastic, long-term either inelastic or perfectly inelastic. Bonds, long-term elastic, short-term elastic, sorry, long-term indeterminate, meaning neutral. So they're not neither elastic nor inelastic. Overall, we get eGHST to be long-term inelastic while short-term elastic. And why that is cool is because when we look at this matrix right there, and Mr. IDK, please, this is like an important one. So remember where we had this matrix from before for the monies in the previous article. So we have long-term elastic on the x-axis towards that one, long-term elastic here, long-term elastic here, short-term elastic on the vertical axis up, and short-term inelastic up and short-term elastic bottom. So the good position for the reserve assets to be, or for good money to be somewhere here, where it's long-term inelastic and short-term also inelastic. So that's gold, that's Bitcoin. Remember, treasuries are long-term, short-term inelastic because you can only mint certain quantity of them in the short term through the auction, but then over the long term, they just minted uncontrollably. Dollars and Ethereum, that's both long-term elastic and short-term elastic because you can just mint it as many as you want. There are no there are no stoppers. Like nobody, dollars can be minted. Like, oh, but the Congress is a stopper. Yeah, but they're fucking minted anyways. Like it's an artificial stopper, right? Like it's literally just an artificial stopper. So eGHST is filling this very unique quadrant of short-term elastic and long-term inelastic. And to be honest, like I've been thinking about like, are there any other instruments that that have such property? And I couldn't think of anything. Maybe a good maybe good examples include like you're a painter like Picasso, and you just you're not famous. Like you're not just like the Picasso. You're just like this Spanish dude who just like paint. You just produce. You just produce these paintings nonstop. So short term, very elastic. Then you die, and your painting goes for $1 million, and then half your painting is stolen or damaged or whatever or lost, and then there's like only very very few paintings left, and they become long term inelastic. So like meaning high quality antique items like paintings, coins, elements, whatever art units like sculptures, like maybe that is what short-term elastic and long-term inelastic. It's a very, very unique property, and I don't think we have monies like this. Of course, Olympus was like that themselves. Like this is just kind of not a carbon copy, but definitely highly inspired. So eGHST is filling this quadrant, and that's at least an innovation that we have. Olympus never thought about this framework, at least we did. So, if there's some critique, please provide this critique. I wanted to also cover Ghost today. The elasticity of Ghost itself, I don't think we have time. It's a huge topic of its own because it's both Ghost token and Ghost coin. It's a little bit easier. So let's discuss it next week. Again, the articles will be published. Let me answer any questions you guys have. So then Vita Money will be in 2 weeks. I'm sorry, guys. I kind of wanted to cover everything faster, but it is what it is. Scorpion, what if a small portion of the 0.03 from the DEX fees on each chain went to the treasury to shore up the short-term elasticity created by bonds? Absolutely correct. So in that case, it's not 0.03, it's actually 0.3%. So the 0.3% from the treasury, as far as revenues originated by bridging, etc., they increase the reserves. So they increase the RFV, and therefore you can kind of increase the APY. Absolutely. The question is, will the DAO go for that? Right. So, and then even if that happens, that's a great, like, amazing question. The supply of eGHST will still be inelastic because 0.3% is absolutely tiny type of increase, and it's completely based on the trading activity. Now, another important thing is, as you are making eGHST supply more inelastic, more finite, the price activity, the price action becomes larger on the DEX. Why? The DEX has a more finite supply of eGHST, and as bridging quantities increase, so the price of eCasper increases on the DEX. So therefore, the best example for that is, if you want to bridge $1 million, before you would need 1 million eGHST coins, right? But then when the price is say $1 million per one eGHST, now you just need one eGHST. Because like what's going to happen on the DEX, the quantity of egos will be finite, or inelastic means like very, very scarce. But the bridging quantity is measured in dollars, and dollars are elastic, right? Dai is elastic. So the more bridging volume there is, the higher the price of eCasper is going to be. So it's going to be less and less Casper per transaction as eCasper price increasing, if that makes sense. So therefore, that 0.3% in dollar terms will be, growing, but in eCasper terms, it actually is not going to be growing that much. What I'm trying to say is it's going to be fewer and fewer eCasper minted in response to the growing bridging volume. Therefore, the inelasticity will stay. The APY, though, can still exist. The fact that APY is 0 is not only not a bad thing, it's a great thing to be, because in that case, the quantity of your coins does not increase, but the price will likely be increasing faster, if that makes sense, right? So like your overall upside from holding Casper or S-Casper on the EVM will potentially be greater the more finite the supply of eCasper on that specific EVM. I hope that, I'm throwing lots of these terms, right? Like inelasticity, elasticity. Going forward, think about elastic means supply is not scarce. It could become not scarce depending on the price, while inelastic means the price is more scarce compared to the price. Now, you can have inflationary items, the items that increase in quantity, that are still inelastic. So inelastic does not mean not disinflationary, and elastic is inflationary. It's more like inelastic means it is inflationary if you it's inflationary if you conduct certain quantity of work to produce it. While elastic means it's inflationary even if no work has been produced. I would probably even quantify, I would probably explain it like this. So guys, thank you so much for your attention. I know it's very, very difficult topics, but this is, I think, the most important series that we all need to pay attention to. Start reading from the very beginning, because the first 3 articles explain from microeconomic perspective, literally economics 101, what is elasticity, what's elasticity of money, what's elasticity in general, what's inflation, deflationary. You need to know that information to then be able to communicate this to your network. Okay, see you guys next week. Thank you so much. Have a good one. Bye-bye.